Hi, accounting students. I am going to show you a little bit of the work together for 2-2 to help get you started. There will be some new things that you're seeing in Applia. So I'm going to go ahead from the assignment section to just select 2-2, the work together and on your own. And now you can see that I can go ahead and select the work together. Remember, it is referencing page 42. So if in your book you have page 42 open in front of you, that might help you rather than having to flip back and forth for some different information. So I'm going to go ahead and select that work together. And what you can see is that I have two separate tabs up here at the beginning that show me the account titles that I can use. We previously talked about this as a chart of accounts. So these are the accounts that this business is currently using. And then I'm going to be analyzing some transactions that happened in March and determining what accounts are going to be impacted by these transactions. One of the nice things that Applia does for you is this little pin. So you can go ahead and pin or pull out your different information. So if you want to have your transactions up in front of you or your account titles up in front of you, then you can manage in that way. What I will tell you is that I like to have my account titles up and then read my transactions from the book. So you can see we have a transaction on March 1st, the 3rd, the 4th, the 6th, and the 9th. And we're going to be practicing exactly what it was that we went through in the video. So I'm just going to leave these account titles up here. And since it's pinned, it will stay on top of the other window that you have going on. So what we can see for the information here, and I'm going to move this over just so we can see it a little bit better for now. Jensen Cleaning Service uses the listed accounts. Some of the accounts are explained in the next lesson. Prepare 2 T accounts for each transaction. On each T account, we're going to select the title of the account that's going to be affected, and then we're going to enter in the debit or credit amount in each T account to show what's actually happening. So I'm just going to go ahead and move this over here. My very first transaction from March 1st is received cash from the owner as an investment of $4,000. So the first thing that I'm going to do here, you notice I have 2 T accounts. Which account am I going to go ahead and select? And so based on the transaction, received cash from the owner as an investment, I'm going to go ahead and select the cash account. And it looks like it was $4,000. And then I'm going to go ahead and this is cash from the owner. So this is that capital account again. And I know that I'm increasing the owner's capital within the business. And so I'm going to credit the capital account. On March 3rd, and again, here are the transactions. However, I'm working off the transactions listed in the book so that I can leave my account titles handy. We paid cash for supplies, $95. So as we think about the 2 accounts that are going to be impacted here, we know one of them is going to be our supplies, and we know the other one is going to be cash. Now, when we looked at our available options here first, did you notice that cash did not appear in that first set? Okay, cash was second, and you're going to see why that matters in just a moment. But let's think about what's happening with supplies. Our supplies are increasing, which means we're going to go ahead and debit supplies. What's happening with our cash? Our cash is going to be decreasing because we paid cash for supplies. So our cash is decreasing of $95. And what you'll notice is that right now, we are entering our debit transaction first and our credit transaction second. Debit, credit. We'll do a quick look at this transaction from March 4th. We bought supplies on account from Supply Depot for $120. So we bought supplies on account from Supply Depot, and you always want to consider, is any cash changing hands with this transaction? And the reality is no, we bought on account. Okay, so the first thing we're going to be looking at is our supplies. And the second thing we're going to be looking for then is we bought supplies on account. So what's happening to our accounts payable? Okay, so our accounts payable for Supply Depot, our supplies, we bought stuff, so they're increasing. We have more supplies, but also we're increasing the amount of liability the business has because this is a payable and we're going to pay it later. So again, we're going to debit supplies and credit accounts payable. Okay. Now, at this point, I'm just going to scroll down. You can go ahead and, well, first I will unpin this and we'll go ahead and check our answers. You can see here then, obviously there's the 14.7 score because I didn't finish it. But you can see that the ones we did here, all of the green check marks indicate that we did them correct. So the ones that we left blank then, obviously, where there were zeros, or they should be empty, that's why we received some credit on these questions, because obviously the zero in the right place is the right answer. So I'm just going to go ahead, say save and continue, and this takes me back to the beginning of the assignment. If you have questions on this one, please feel free to stop in and talk to me. Otherwise, if you do this one successfully, you can move forward to the on your own. Good luck.